Trump not letting up on his attacks against Powell. He called him a, quote, very dumb and hard-headed person for not lowering rates. That's actually a pretty good day between the two of them. Doug Flynn joins us now, co-founder at Flynn Zito Capital Management. So, but what do you say about how Powell explained it? He said, you know, if this was, quote, normal times, we already would be cutting rates.
The issue with this is that they're supposed to be following the data, not a forecast. And that's not a normal thing for them to think about where things may be going. It's about following the data as it is. And right now, there really hasn't been any proof yet that the tariffs are causing inflation. Now, maybe they will, and he can claim everybody he knows is saying that it will, but it hasn't yet. And if it doesn't, it's going to be the second mistake they made after calling inflation transitory. They did it a couple of years ago where they were wrong on that. So it wouldn't surprise anybody if they were wrong again, or at least late. And I think that's part of the issue is our rate is too high over inflation as it is, even if it ticks up a little bit, and it's much higher than Europe. And so we've got room to lower rates regardless of him waiting for it to actually come true or not.
So what do we all do with this as American consumers? We had consumer confidence out today. Seems like it was actually getting worse, right? Confidence?
It did. It ticked up. Improved in May, but in this past month, it went back down again, gave about half back that it went up the previous month after being down for a couple months before that. And what it's saying is basically that people are feeling a little less confident. There are some inside here, there's some labor market indicators that show that people feel that the jobs are not as plentiful as they were. And they're also looking at future business conditions, and those look out 6 months, and people are feeling that they're going to be weaker than they are currently. So you add that up, and that means the consumer's feeling weaker, perhaps businesses, the labor market is weakening. You add that in with uncertainty, and that's another reason why at some point we're going to get lower rates, but maybe it's going to be much later in the year if we wait for Powell to do it.
I said before the break we were going to talk about Taylor Swift. Everybody knows you've become our Taylor Swift correspondent of sorts. This story actually doesn't really have much to do with her. The Taylor Swift tax, it's being called in Rhode Island. It's not the official name, hasn't officially been named after her, but it adds a surcharge to second or seasonal homes that are worth over $1 million. Has to be your non-primary residence. One that would be empty for over half the year, could increase a seller's fee by 63% overall. What do you make of this in Rhode Island, and whether we'll see more of this kind of thing?
Yeah, it's an issue. I mean, they're looking to raise revenue, and they're going after, well, in one side, they're going for the people who aren't year-round residents per se. And the reason they're hitting Taylor Swift with it is because she bought that $18 million property.
Yes.
And so when you do the math on this, that's going to cost her an extra $163,000 a year. But even if you have I would say even if you have a $2 million property, that extra million is going to cost you an extra $5,000 per year just because they can. And the other thing on top of that is at some point when you sell your house, it doesn't matter whether you're a full-time or a part-time resident, they're raising those fees to sell, and states do have that. It's just a way to get you because, again, they can. What are you going to do? You're going to sell your house. But it does halt people from maybe considering this place versus another,
right,
all
not
things
Rhode
being
Island,
equal.
if you can afford a second home. Hey, quick thoughts with 30 seconds to the closing bell about where we are. What are we, like 1% off a record high in the stock market with everything that's happened this year? Isn't that crazy? Less than
1%. Yeah, the market's saying that all this stuff about Israel and Iran are going to abate, and we're going to get beyond that, and that's what the market's sniffing out and saying, but better things lie ahead. So we'll see if it's right.
I wonder Tweety Brown's clapping up things down there at the New York Stock Exchange. Thank you, Doug. It's coming up on 4 p.m.